Hey friends, good evening. We have an update on three companies which result, which actually gave out their results. The Q4 FY25 results were out yesterday. There have been changes in the stock price based on the performance. These stocks have done well. First company is Lakshmi Electrical Control Systems. We can see we'll go through the financials on the other screens. You can see the net growth is 1978% quarter on quarter and 35% year on year. That is important for you all to know. Then the second company is Transpec Industry. The company surged 20% in the price yesterday. Again, the growth here quarter on quarter was 81% and year on year 241%. Then the third company was Niva Bupa Health Insurance Company. Here, there's a growth of 1,485% net profit quarter on quarter and 241% year on year. So we'll go through the details one by one. This is another company. I've omitted it from our discussion today. This is more to do with a stake that Nikhil Kamath has backed from this company. So we'll ignore that for now. Important is all investment opinions and recommendations mentioned are solely those of the respective experts, broking houses, and rating agencies. The views do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. Uh, then you can see here the price of Lakshmi Electrical Control System 970 today. Over the last 5 days, you can see 8.5% growth. There may have been some correction after the stock surged yesterday, so people may have booked in some profit, try to gain some profit, or try to get some value add recovered because of the increase in value. Then you can see over the last 1 month 11% uh, gain, then over the last 6 months negative of 26% and negative of 41% in the last 1 year. So if the company has a stable growth model, and there is a chance of good growth in the smart meter segment here, then you will see that the company would be able to make up for this loss that they've had in the last 1 year. You can see stock price may face volatility due to ownership structure. Stock is at a premium valuation. Company seems highly inefficient in cash management or asset management. The company possesses stable growth history and manageable debt. Price to book of 0.84, face value 10, book value of 1,160, debt of 6.65 crores, cash of 10.55 crores, promoter holding 36%, earnings per share 14 rupees in the last 12 months, and ROE is not too great, 5.44, profit is minus 30%. 1981 Incorporated manufactures and sells control panels and plastic components. Okay, part of the Lakshmi Group. Current price 980, high of 1,817. Then stock PE of 64, book value 1,161. You can see here the return on equity is very low. On this side, dividend yield 1.53%. Then you can have stock just trading at 0.84 times book value. So at stock price is available at a very good price. Company has maintained a healthy dividend payout of 27%. Promoter holding is low of 36%. Low return on equity. Other income of 5 crores. Sales again erratic. Uh, Net profit, yeah, from a minus to a positive. Amazing net profit in the last quarter, which is the reason why the stock is on a good run, bull run. Sales, you can see, have dropped compared to the previous years, so a bit of a concern. Net profit for the entire year is just 3 crores, which is again a cause of concern compared to the previous year's performance. However, with the last quarter results, there seems to be a good chance that the company may perform well. However, I would suggest you consult a financial stockbroker to get a expert advice on how the company is likely to perform in the near future. Then you can see uh, all the elements of the last 1 year are all in the negative side. Reserves have grown slightly in the past 1 year. Last 2 years, a good amount of growth, however, not able to meet the expectations of the market. Then promoter holding, public holding is 63%, which is very high, can easily lead to a lot of fluctuation in the volume of the stock. Uh, could be could end up in the oversold zone, and price volatility would be also high. And the second company is Transpec Industry Limited, 2% up, 20% up in the last 5 days, 27% up in the last 1 month, minus 2% in the last 6 months. This is minus 2% only because of the last 5 days performance, or yesterday after the results were declared. It has managed to make up most of the value lost over the last 6 months. You can see over the last 1 year it's about minus 9%. Manufacturing and export are a wide range of chemical, serving the requirements of customers from a diverse range of industries, including textile, pharmaceutical, agrochemical, advanced polymers, etc. Then high of 1896, current price 1532, dividend yield 0.91%, return on equity 7%. Company has delivered poor sales growth of 3% in the last 5 years, low return on equity of 9.2 in the last 3 years. Company is trading at 1.15 times its book value, so it's available at a very good price, very reasonable price. Company has maintained a good healthy dividend payout of 20%. Then you can see comparisons to Pidilite, SRF, Linde India, Gujarat Fluorochemical, and Gujarat Industries, Godrej Industries, sorry, Deepak Nitrite, Navin Fluoro International, Transpec Industries. Then you can see the lowest stock to price earnings is from Transpec Industries. All the others range from about 30 odd to 120. So huge variation in terms of market cap as well. And sales again erratic, as similar to the previous company. Net profit though has grown in the last quarter, which is the reason why we have this stock rallying up. Sales again in the last 2 years it has dropped. Overall improvement from the previous year in the net profit result. The reserves have increased a bit, which is a good sign. Then promoter holding 57%, public again 40%, so highly volatile. In tends to It can go up into the oversold zone, and there could be a high variation in price as well. So Niva Bupa minus 0.7%, 3.5% only in the last 5 days. So about there has been a correction in the stock since it's a good uh, and a popular uh, company and high stake by a lot of stakeholders. So there has been some correction in the price after the stock rallied yesterday. 18% up in the last 1 month, 17% in the last 6 months, and about 17% in the last 1 year. So I think this company was listed sometime around September, October last year. So that is the reason why you can see that the company is in the positive right now. Health insurance driven by uh, leading health insurance in India. Again, you can see price is 86, high of 109, return on equity of 7.33, face value 10 rupees. Stock is trading 4.2 times book value. No dividend paid yet. Tax rate is low. Return on equity is 6.13% in the last 3 years. Earnings include another income of 155 crores, which again needs some consideration and analysis. In comparison with Life Insurance Corporation, SBI Life, HDFC Life, ICICI Lombard, ICICI Prudential Life, General Insurance, Go Digit General. So it has the lowest market cap compared to some companies. Stock PE also uh, on the high side compared to some other companies. LIC has the best price to earnings ratio of 12. Then you can see last quarter there's about 25% or rather 23% increase in revenue and a huge increase in uh, what you call net profit. So if the company is able to maintain higher revenue uh, and keep its expenses in check, the company can actually do very well and the company could add good value overall. Again, I would suggest you connect or speak to a qualified financial advisor for further advice. You can see sales year on year. You can see each year there's about 20 to 25% growth. Uh, yeah, the previous years the growth was more than 30%, and this year it is about 25% because of the numerator or the denominator increasing. You can see the profit has grown in year over year as well and is doing well now. So it's a good chance that it would continue to do well in the future. You can see compounded sales growth 28%, profit growth 16%, oh sorry, 161%, so which is amazing. Return on equity is about 7%. Then you can see reserves have grown last year due to the IPO and the capitalization or the premium the premium offering of the shares. So that is the reason why they've managed to build up some reserves. Borrowings are about 250 crores, which is stable quarter on quarter. Then you can see it's about 25% public holding. So there again could be a high chance that there would be some volatility in the stock price and the volume as well due to the 25% public holding. So, friends, thanks for watching. Please share this with your friends, family, and associates so that they could also benefit from this information. We'll connect again tomorrow with another video. Have a good weekend in advance. Please take care of yourself. Ensure that we do not venture out with the prospects of the India-Pakistan war. So please be careful, especially along the border areas, and follow the uh, drill and follow the guidelines by the government and the local authorities. So thank you very much. We'll connect again with another video soon.